Stocks are up today in the pre-market. That's good because I didn't sell yesterday. Maybe I should sell this morning though. Because they might go down. Or maybe yesterday there was just too much fear in the market. Maybe I should keep my shares. I'll leave it for later when the market's actually open. Let's see what's happening now. Stocks are down? No way. Everything was almost green in the morning. They're down like 3-4%. That's unbelievable. I should have sold. I knew it. Might be too late to sell now. Maybe I'll just hold on. Down 6%. Hey Google, should I sell my stocks today?
On the website iwillteachyoutoberich.com, they say, if you believe the market will recover, that means investments are on sale for cheaper prices than before, meaning not only should you not sell, but you should keep investing and pick up shares at a cheaper price.
Amen. Welcome back to The Fire Grind. On this channel, we talk about everything and anything that has to do with personal finance and just helping you become financially independent so you can retire early. On today's episode, I'll be going over how to invest in a stock market crash and just give you a few tips of what to do, as well as I'll be going over my portfolio, and you must be curious as to what's been happening, as if you're invested, you would have seen your portfolio probably drop 5, 10, 15% over the past couple of days. So without further ado, let's smash that like button. So the first tip I have when I'm looking at stocks to invest in are to pick companies that have some sort of resilience against the stock market crash cause. So right now, there may be a crash coming, we don't know. However, it's pretty clear that the cause could probably be coronavirus. And so if you're looking at companies that are resilient against coronavirus or that actually benefit from coronavirus, the companies that come to mind are the waste sector. The reason why I think of the waste sector is because tomorrow people are going to throw out trash. In 3 months from now, they're going to throw out trash. In 4 months from now, they're probably going to throw even more trash. And the fact that coronavirus is causing people to stay home, you know what happens? People decide to order online, order takeout. So there's a lot more recycling happening, a lot more trash being thrown out because people don't want to go out and they order delivery. And this generates more and more revenue for waste companies. On the flip side, they probably are affected a little bit as companies are maybe shutting down and they're not generating as much waste as before or not generating any more waste. However, for the large part, if they're not generating waste at companies, people are generating waste at home. Another sector that will actually probably benefit from coronavirus is streaming companies. So I can think of like Netflix here in America or iQIYI in China. The reason why I think streaming companies will benefit is because when people are at home, they're pretty bored. So what are you going to do? You're going to either go on the internet and look at articles, watch videos like YouTube, or you're going to watch Netflix and watch those shows. And especially if you've got, a full week off, you're going to binge watch some shows, aren't you? Another sector that will benefit from this is companies like 3M who make masks. We know that everyone in China is just buying the stores out of masks. They're actually completely sold out right now. I know that my dad actually bought some masks and sent them to my aunt in Hong Kong because they couldn't get any there. So companies like 3M that make these masks, they are definitely just out of stock right now. They're scrambling to make as many just to fill the market demand, and they're probably going to profit off of this. Also, companies that are in the health space are probably also going to gain from this as they are selling drugs to people who are sick. So maybe people want more Advil or Tylenol because of all the sickness going around. The second tip that I have for you guys is to pick companies that have a strong balance sheet. In companies with a strong balance sheet, this means they have good amount of cash on hand and very low debt or even no debt at all. Some companies that come to mind if you're into growth investing is Shopify. If If you're into more dividend and safer plays, companies like Apple are pretty good for this. They just have hordes and hordes of cash, and they're not going to go anywhere in the next 6 months if they don't sell any iPhones. They have like $100 million in cash. They can continue funding operations, building up inventory, and when people come back out into the markets to buy iPhones, iPads, iMacs, they're going to be able to fulfill that demand. The third tip that I have for you is a bit more of an advanced tip for those of you who know how to deal with options. You are probably familiar with this. You just want to hedge your positions. And this is to essentially bet against your long-term positions if you're a stock buyer. To bet against them, you would be buying put options or shorting shares. The way that I would do it personally is to buy put options because you limit your loss. I won't be going over put options. If you're interested in what they are, you can just do a quick Google search. But essentially this is how you hedge against your portfolio. Another way to hedge as well is to buy gold. We know that gold holds its value over time and the value slowly increases. However, in the wake of a market scare or market crash, we know that gold just skyrockets up because investors are looking for a safe haven to place their money. So if you look at gold, it's actually gained quite a bit over the past few days because of all the fear in the market. The fourth tip I have for you, and this is the golden goose egg tip, is to dollar cost average. So I'll give you an example of dollar cost averaging and a way that you can use it in the wake of a stock market crash. Now, if we think back to 2008, there was a housing bubble. And if you decide to invest right before that, right before the day that the market started to crash, and you decide to throw $10,000 into the market, just like that, bam, on the dot, $10,000. You're like, I'm going to make money in 2009, 10, 11, the market's going to go up, up, and up. You are dead wrong. However, you're probably smart enough, and maybe you saw something about dollar cost averaging, and you decide to continuously invest $100 each month at the beginning of the month. And at the beginning of 2009, you would actually have $7,300 in that account. And you would have invested $11,200. And you would be thinking, this dollar cost averaging thing is not working out. I've already lost 36%. Why am I going to continue investing? I should just pull my money out. But you thought about it a bit more and you're like, maybe I should wait it out. People say I need at least 5 to 10 years in order to secure gains. So you waited out for another year just to see what would happen because you're impatient. So let's fast forward to 2010, and here we notice that your portfolio has actually jumped to 11,100. So your losses have gone from negative 36% to negative 6% now. So really, in fact, from 2009 to 2010, the markets have recovered substantially and your losses have minimized to about 6%. Your total invested is 12,400 and the value of your portfolio is 11,100. And you're like, that wasn't so bad. Let's give it another year. So fast forward to 2011, and here we have $14,000 in your portfolio and you put in 13,600. So over a period of about 3 years of dollar cost averaging, you finally start to come out on top. But the story doesn't end there. Now let's just fast forward to 2020 just for the sake of time, and let's see what we get. Now the value of your portfolio in 2020 is actually $61,700. And your initial cost basis is $24,400. That's a 3x gain right there, just for putting $100 each month with that initial investment of $10,000. Now think of that if you were to invest $10,000 today and you continue dollar cost averaging into it over the next 5, 10, 15 years. You could probably easily 3x your money, maybe even 4x. Now if we accelerate that to $200 per month, just to give you an idea of what could happen, you now are at $94,000 in that account and your total invested amount is $38,000. So you can see the power of dollar cost averaging. Instead of just throwing all your money in today, you throw it in chunks here and there as you get paycheck after paycheck. So Wealthsimple is a great platform for this, and that's why I personally use it, is because I'm able to invest small amounts like $100, $50, or even $20 at a time into stocks that I like, and I can dollar cost average year over year, month over month, even day over day if I wanted to, without paying a single fee. So these are the 4 tips that I have for you of how to handle a stock market crash. Let's get right into the portfolio now, and let me just show you what's been happening in mine. And you can see the kind of losses that I've been incurring. However, these losses are on paper only. They have not materialized because I have not sold anything. So we're here now in my portfolio, and you can see that as of today, I've lost 2.9%. And that's quite a large amount for this portfolio. It's $465. Now, some of you might be like, wow, that's a lot of money. And others of you might be like, oh, that's not too bad. However, everyone's at their own pace. So I'm just showing you what's been happening in my portfolio. If we look a week back, you can see that I'm down about $1,100, and that's 7.3% of my portfolio that's been down. However, overall, since I started this portfolio, I'm actually up $708, which is 4.4%. So I'm not really complaining. And throughout that time, some of my stocks that are dividend stocks have been paying me cash, and I believe that they will continue to pay me cash. Those are the kind of stocks that I'm looking to buy right now as they're going on sale. So I'll just be mentioning a couple stocks that I'm buying right now. The first one that I'm looking to add more to this position is ATS Tooling. ATS Tooling, they make automated machinery, so they help car factories or life sciences just automate a lot of the tasks that they do to make products. So I believe that automation is just going to continue to boom, and we have an article right here just showing just the outlook for automation in general. So a recent report from Fortune Business Insights forecasts that the global industrial automation market will reach $296 billion by 2026, compared to a value of $157 billion in 2018. So this is over 8 years. The market almost doubles. This would represent a compounded annual growth rate of 8.4% over this period. You can expect if ATS was to capitalize on this, they can at least get an 8.4% return year over year, and that's pretty good in my books. And as the stock is dropping, the value becomes even greater. So we can see in the recent quarter on February 5th, revenues rose 14% year over year, so they're actually beating that 8.4%. However, their EBITDA shrank to $26.8 million due to restructuring changes, higher stock compensation, and operating inefficiencies. These are sort of one-time costs, and they will go away eventually. We can also see the order backlog is now $939 million. So what this means is that they have $939 million worth of business lined up. And if we look at their revenue for this year at $367 million, this means they've lined up almost 3 years of projects in advance. And this shows me that this company is just going to continue to grow over the next 3 years, even though there may be a short-term fall in the market. At least they have this business secured. So I believe that ATS has a fairly strong business, even though there may be a stock market crash. People are not going to all of a sudden drop their contracts with them. The next business I'm going to be going over that I'm buying is Manulife. Manulife is an insurance provider as well as financial services provider in Canada. They're a very solid company. They're one of the top 3 insurance providers, and I'd really say they're one of the top 2, them and Sun Life. Manulife has been on a dip. They've dropped about $4 in the past couple of months. However, the dividend yield has become more and more appealing at 4.69%. And if the price goes up and they continue to grow the dividend, that yield on cost is just going to become greater and greater to maybe 8% in the next 5 years is my guess. And you can see that I haven't bought them in a while, but in the next few days as I see the stock drop, I think I'll make a purchase. The last stock that I'm looking to buy and actually have purchased some today is Storage Vault Canada. This business has been on a tear over the past 5 years. We can see that it's gone from the 50-cent range to $3. However, we can see in the past month, it's just dropped because of the coronavirus fears. And it's not because Storage Vault Canada released any bad news at all. It's just overall everyone's selling right now. In Storage Vault Canada, they actually pay a small dividend, which is great. That as their stock continues to drop, they are still paying shareholders some sort of compensation as being a shareholder in the company. Storage Vault Canada, they're consolidating the storage market. There's a lot of mom and pop shops out there that are very inefficient in their operating costs because they have to hire finance people, they have to hire administration, and a lot of behind the scenes stuff. Whereas Storage Vault Canada, they can have one finance person managing maybe 10 stores and one sales person for 5 stores and one HR person for maybe 40 stores. So you can see there's a lot of operating efficiencies that come in when they buy up more and more businesses. And as they buy more and more of these, the revenues will continue to grow and they will find ways to also upsell things and continue to boost their profits. So this is the reason why the stock has risen a lot over the past 5 years. However, I still think that this is a great company to buy at this price. As they continue to grow and become a larger company, they'll also attract larger investors, which will continue to boost their stock price. So for this reason, I have added some more Storage Vault Canada to my portfolio as it has come down to roughly the average price that I bought it at initially. So I want to continue to boost that position right now. That about wraps it up for my stock portfolio. If you have any questions or comments, just leave them down below. I'll be answering every single comment that's posted there. Just to create some dialogue, if you have any questions about the stocks that I bought or just disagree, feel free to let me know and I'd just love to chat about that. If you like this video, remember to smash that like button. It really helps my channel out. I'm just getting my videos out. I really enjoy doing this, so I really want to continue making this a longer term thing and sharing my knowledge with you as my viewers. As well as click the subscribe button if you haven't done so already, so you can get updates of when I post new content. I try to post at least 2 or 3 videos depending on what I'm doing this week. And lastly, I'd like to say thanks for those who have hit that subscribe button and smash that like button. It's really helping my channel out and also motivating me to continue to make videos for you guys. Keep up the grind and have a great day.